Hey family, so this is Wednesday's trade review. I took one trade today. I'm going to go over it and make it really quick. It was a red trade, so this is my first red day of the week, although I did keep the red trade really small, and I wanted to go over exactly how I did that. So, ES this morning was a chop fest for sure. We got a lot of tech names that broke out pretty early in the day, but then quickly failed. And as NQ started to fail at around 8:40, I got into an SPX put at, I got into the 44.75 puts at 2. And my plan was that if tech's failing, and tech's been leading the market recently, all ES needs is YM to fail as well, and we should get a nice reversion back down towards the 44.60 level down below. So that was my plan. If we can break out of this 44.76, we should fire the 30-minute and 1-hour squeezes that ES had pre-market, and we should go lower towards 44.60. So when I entered at 8:40, 10 minutes after open, my plan was just to get an early entry into this trade. I did accept 0 on it. It was a lotto. If NQ and YM did pick up, then my put would have gone to 0. And that was essentially my entire plan. Except 10 minutes later, I got an alert in ad, which made me cut this trade short. And I only cut it for a 30-cent loss at 8.50. And the reason I did this was also, if you can see, that put would have gone to 0 pretty fast. It ripped around a couple hours later. It ripped all the way towards new highs. So I'm glad I did cut it, and I love using this indicator from ad almost every single day, especially if I am trading the market. I'll take a look at this. So let me show you all exactly what I look for in ad. So ad, as you guys know, if you've been watching it for a while, what ad will tend to do early in the market is push one way or another. So today it pushed down pretty hard. It pushed down for the first 4 1-minute candles and fell around 800 points. Now if you look at ES didn't make the same move as ad. Okay, ad in the first few minutes generally won't follow exactly the same as ES or NQ or YM, but ad will lead on its own. So ad led down today. In other days, we can look at yesterday. Let's see if yesterday had a move. Yesterday was kind of a chop fest. Eventually pushed down pretty hard. Let's look at the day before. Started out strong with a nice push up and then down. So today started out down pretty hard. Now, what I like to see is ad start to base, or if we pushed up for the first few minutes, I like to see it top out. And then what matters is if you can get back towards high a day, which would be the open level. After ad makes a nice push, if you can get back towards high a day and cross high of day, then I noticed that 9 out of 10 times ad will never go back towards low a day. And this is important because ad is generally a leading indicator of ES. So if ad's not going to get to low a day, usually that means ES isn't going to get there either. So at 8:50, 10 minutes after I got into my call, we crossed high day, and I got out for a 30-cent loss instead of accepting 0 on the whole $2 contract. Now, let's take a look at some previous days so y'all can see the power of this tool. It's very simple. Let's look at yesterday. I wasn't looking at this yesterday, so let's check it out. Okay, so like I said, we got a little bit of a chop fest pretty early on. Fell, pushed, didn't get to high day, and then made a nice bottom, eventually getting towards high of day up here. So we did get a breakout of high of day, so that should mean that ad does not get towards low day, which it didn't. Let's check out the previous day. Ad made a nice push up, made a top right here, and then broke down low of day. And so that should mean ad should not get to high of day again, which it didn't. Let's look at the previous day. Just one more example. Ad pushed up. So this example doesn't really count, but made it a little low here and then break high of day. Should never touch low of day again, which it didn't. So that's the power of this tool. I love using it. One of my favorite ways to use this tool actually is if I'm not in any position and I see this, I'll actually go long here. But since the ES has been chopping and we did have Jackson Hole on Friday, or we do have Jackson Hole coming up on Friday, didn't really want to put any more risk on SPX. So I was going to look towards other names. Everything already made its move pretty early on, and I didn't take any other trades today. Still really green on the week. Just a small red day today, mostly a non-event day for me. But yeah, I would like y'all to experiment with this. Just test out yourselves. It should work. Like I said, 9 out of 10 times this trick should work. What I used to do with this actually is if we did break this high day, like in this example, I would actually go and sell the puts that lined up towards SPX's low of day. This was when I was using my spread account a lot more. I don't really do that anymore. I'm mostly a day trader and swing trader now with naked options, but when I did use my spread account, that's exactly what I would do, and like I said, 9 out of 10 times it would work, and I would make that 1 to 3 risk to reward, or 3 to 1 risk to reward, and I'd make that 9 out of 10 times. Nowadays I normally switch to calls, but my plan today pre-market was not to go long at all on SPX, and so I followed my plan. So I count that as a good trading day. Hope y'all had a great day as well. Hit me up on Twitter if y'all have any questions